Hello traders, this is Forensic Forex with Deontay, where we analyze the details and specifics of the foreign exchange market. In this video, I will speak about high odd reversals during London close. Most retail traders do not understand certain trading sessions will change the movement of the price action. Many traders lose profit when this change occurs. I will show you how to retain profits and squeeze more out of the marketplace during London close. Stay tuned. Leave the indicators alone. This will be a three-step process, starting with core curriculum, chart activity, and lesson plan. Let's jump right into core curriculum. London close starts at 10 a.m. and ends at 12 p.m. New York Eastern Standard Time. The price action characteristic that the London close has is typically going to be a reversal or continuation. Though London close has two distinctive characteristics, I will be focused mainly on the reversal. When considering a reversal, keep in track of the following: where is price relative to MLP, and where is price relative to SOP. This allows us to keep in mind if price is in a premium or a discount. This will give us more confidence about which side of the market we should consider. Are we buyers or sellers? For the chart activity, we will first mark out the entire weekly range. Second, we will identify all the London close sessions for the week. Third, we will analyze the price action before the London close sessions. Let's take a look at some examples. For this example, we're looking at gold versus US dollar, and we're using the most recent week that we have available. We're going to break down the weekly range, and we're going to do it on the 1 hour chart. Here we have Sunday to Friday, and we're not really concerned about Sunday. We're mainly concerned about Monday to Friday because that's where the London close is going to reside. We also have some natural price action indicators like Sunday's opening price and midnight opening price. They are the same thing. This is just meant for the weekly range, and this is just meant for the intraday daily range. So anything above this opening price is going to be a premium or overbought. Anything below is going to be a discount or oversold. The same thing is said for midnight opening price. Now, if we take this a step further, we're going to look at the London close session for each intraday. So I have an indicator that will show us in the orange shaded area. And London close is going to be 10 a.m. to 12 p.m. As you can see, that's where it is here in this orange shaded box here for each day, Monday through Friday. There's no London close for Sunday. Looking at the London close, we can make further insights to what London close is doing to each intraday daily range. We can see here that for Monday, most of the price action was mainly going down, but as soon as we got into the shaded area, there was something occurring here that caused the price to turn around and trend back up for the rest of the day for Monday. For Tuesday, it was kind of a whipsaw Z day. It was back and forth, but overall, you can see it was going down in the New York session. And then we can come into the London close and see that some type of change in trend occurred for price to trend back up this way. We can see Wednesday, price mainly dropped down, moved sideways, then London close appeared, and then we can see the market started to rally up for the rest of the day, going opposite to the daily trend. We can see here for Thursday, price is also sideways, drops down in the New York session, instantly London close opens, and price rallies back up, causing a change in trend to the day. Here on Friday, we don't get that London close reversal, but we'll speak about why it was less favorable. Dropping down to Monday and looking at a 15-minute time frame, we can see that the London close does not start the reversal, but shortly after it, a reversal trend does unfold. However, if we look at the prior sessions, like Asia, London, and New York, we can see most of the days was going down. New York was going down, and London was going down. We get into London close, which typically is going to give us a reversal. How would I know that a high odd reversal was going to play out? Well, there's two things. I know that price is below Sunday's opening price, which is a discount or being oversold, and we're below midnight opening price, which is also a discount or oversold. Odds are that London close is going to give us a turning point. Here for Monday, it doesn't specifically do it during London close, but you can see 30 minutes or an hour later, the market does turn around and change against the daily trend. So the daily trend earlier in the AM session was going down. As we get into the later AM and PM sessions, the market comes down and then goes back up. This was a higher odd chance of London close turning the market around for you to potentially catch a turnaround in price. This range on the 15-minute time frame, we can see primarily that the day was choppy and back and forth. It was either running higher, then running lower, then running higher again. We can see during the London close session, at one point in time, it's above Sunday's opening price and midnight opening price. We can see a quick change in the trend of it dropping all the way back down. We also notice later in the session as well that the market is below midnight opening price and below Sunday's opening price, and the trend changes once again. After that, the market rallies up. If we look at the other sessions, primarily the New York session, we can see that it at one point in time was down and up, but London close set up some type of higher reward for a reversal here and a reversal here. However, you may see this as a indecisive day, as I do, so this example may not be the best example. Not every single day are you going to get clean examples or clean setups for the London close. That's just the nature of this market. Wednesday's daily range on the 15-minute time frame, we can see that London close starts to trend change in the market. We can see in the early AM sessions, the market was trending down. London does drop down quickly, does consolidate towards the end of it. The New York session is choppy the entire way and consolidates, but London close, as we know, has two characteristics, either a continuation or reversal. And this situation, I'll be looking for a high odd reversal because it's below midnight opening price, discount, and it's below Sunday's opening price, discount. The two are aligning. London close is most likely going to give me a reversal to the upside to the down daily trend. So if we look at the earlier AM sessions like London and New York, we can see overall the market was going down immediately. Does move choppy, and then London close gives some type of setup here to change the trend and to go up. Because we're below midnight opening price and we're below Sunday's opening price. So you guys can see that up there. So we're at a discount and we're at a discount. So the two are aligning to make this a high favorable reversal to the daily trend. So from this going down, this is going up. Looking at Thursday's range, we can clearly see that the London close gives a reversal to the daily trend. We can see that there's that same double confluence occurring here on Thursday. It's below midnight opening price, so the opening price at 12 a.m. here, New York Eastern Standard Time, and we're below Sunday's opening price, so the opening for the weekly candle. The fact that it's below it while the session is opening and the early AM sessions were trending down gives me the odds of a higher reversal and price runs up. So if we look at the early AM sessions like London and New York, so let's put it on the chart here, we can see overall the daily expansion was going down. And then London close, because of its two characteristics, I'm mainly focusing on the reversals because of this condition and the other one up here as well. These two conditions align, giving me a check that I'm going to get a high odd reversal. The market then trends immediately at 10 a.m. It just runs straight up, running back up above midnight opening price and then making the high for Thursday. And then the market, you can see once again, falls back down. But we're not concerned about this price leg here. We're mainly concerned about this price leg here because it's going opposite to what the New York session is doing and what the London session is primarily doing. Said earlier in the video, we can see here that the London close gives us a continuation pattern here on this Friday's example on the 15-minute time frame. Now, why is that? Well, that's because we can see that the London close, it's above midnight opening price and it's below Sunday's opening price. So the two aren't aligning. We're not getting that double confirmation that we like to see in that Thursday example. Price action just runs straight up, giving a continuation to the overall daily trend. We can see in the earlier AM sessions here that the overall trend was most likely going up. It wasn't showing true strong nature to trend down like this. We could see that the market is mainly going up in price action. Even though the New York session does come down, overall, the market is moving up. You could say, because traders may look at this differently, it all depends. Sometimes this stuff is subjective in the way you view it. You could say that this market was also choppy and sideways. So there's different ways you can look at it. But for me, I can see that the market overall was going to trend up because of other confluences, of course. But we can see that the London close high odd reversal was less likely going to play out. Instead, we got the continuation pattern following the trend going up, having a higher close on Friday. Here for this example, we're looking at British pound versus US dollar. So I have the same thing broken up. Sunday's opening price, midnight opening price, and we have all the sessions. We're mainly concerned about the shaded session that's orange, which is London close. So we look at Wednesday. Look at how Wednesday is below midnight opening price. You see that right there? We'll zoom in. And the big dotted line here is Sunday's opening price, so you guys don't forget. And I'll even write it out so we don't lose track of what it is. Want to make sure that everything is clear in these videos. You have Sunday's opening price here, and you have midnight's opening price here. This is Wednesday's range. We can see overall for the day, the market was going down. London close starts, and what do we get? We get a small reversal to the daily trend. The market immediately turns around, and even after the session, we can see that the market runs a little higher as well. So we can see that the double confluence is occurring once again. Midnight opening price is all the way up here, 12 a.m., and then Sunday's opening price. So the market moved all the way down into a oversold condition, and London close said, yes, it is my turn to shine, and give a reversal. There's a higher odds of the market turning against the daily trend going down and then coming back up. If we look at Thursday, we can see the same thing is occurring as well. So this is SOP, so we don't forget. We can see London close is below midnight opening price and Sunday's opening price. There is a small reversal that occurs here. So there's an opportunity to squeeze a couple more pips out the market. Now, let's say you didn't trade New York or London, but when you checked your phone or whenever you are available to trade and you're trading within 10 a.m. and 12 p.m. and you see this double confluence and you see that the market overall was giving you this down, odds are you can find a trend change reversal right there. Not every time you're going to get it, but there is going to be a higher odd of you getting a change in trend there. If you look at Friday as well, same thing for gold. This odd of a reversal was less favorable. Now, why is that? Because we can see that price is below Sunday's opening price and above midnight opening price by 10 a.m. So there's no double confluence. It's not on one side of the line from both of them. It's in between. Continuation pattern unfolds. I want to be transparent and look at Monday and Tuesday and not look at the other days as well. So we're just going to come over to Monday right here. And you can see here that the high odd reversal did not play out well here. So it would have been a losing day or a losing trade, which is going to happen. There's going to be days when you lose. So if you wrote it out, this is midnight opening price here. So we'll put it out, MOP. That's 12 a.m. New York Eastern Standard Time. And then the dashed line here is Sunday's opening price, the open to the weekly candle. So you do have that double confluence. It's in a premium for the day and a premium for the weekly candle. And you don't get that high odd reversal. Even though things are in your favor, doesn't necessarily mean that the trade setup is going to go your way. You just want to put yourself in higher case scenarios. And today would have been a higher case scenario for Monday's example, but it just didn't play out. And you're just going to have to live with that. If we look at Tuesday, same thing as well. We're above Sunday's opening price here. And we're above midnight opening price. 10 a.m. starts, we do get a move down. But you can see that same way for gold, GU on Tuesday had more of a whipsaw day. You can see the New York session is like going back and forth. It goes up, comes down, then it goes back up. 10 a.m. It does start at 10 a.m. You can see here, 10 a.m. It is above midnight opening price and SOP. The market does drop down. This could be a less favorable day because of the way the price action was flowing for the day. It wasn't really decisive in where it was going and trending up or trending down like this. You can see how this was really decisive. It was making a move down, 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 and then London close comes, and then the market changes its trend short term. Here, this might have been a less favorable day because the price action was more choppy, especially during the New York session. When it comes to trading the London close, there are two ways I would recommend hunting setups. The first way is waiting for a lower time frame shift and using the fair value gap as an entry. The second way is looking for a lower time frame swing low and swing high to hunt an optimal trade entry at 62% retracement level. Let's take a look at both examples. Looking at gold versus the US dollar. And for the first entry technique, you may be looking for a lower time frame fair value gap in a market structure shift. Here we're looking at the 15-minute time frame and we don't see anything here. And like I said, it is high probability because it's below midnight and SOP, and the overall trend in the early AM session was down. We don't see any fair value gap here, so we're going to go into the lower time frame. So let's check the lower time frame. check the 5 minute because we're on the 15. And you can see that there's a fair value gap here. But for my liking, I don't see a shift. I want to see the fair value gap break a swing high. I don't see that here. Maybe even on a 3 minute or the 1 minute, there is one. But let's say you don't opt for the fair value gap, where you see a swing low and a swing high that you like. And you can see now that the price action comes down and hits 62% retracement level right there. You go in long here with a stop loss below the 100% line here, or the bottom of your fair value gap anchor, and you hold for either 10, 15 pips. There are times where the London close will give big rewarding setups, but normally during London close, you're looking for very small pips. You're looking from anywhere from 10 to 15, 20, 30 if you're lucky. Don't get too greedy when it comes to the London close, because most of the AM session, the market might have exhausted itself and the volume after 12 p.m. may not be there. You can overall catch a trending market going into Asian, but it is probably going to be less favorable. Try to capture your pips while you're inside the highlighted areas. Anything outside of the highlighted areas, you're most likely going to be chasing price and you're going to be stuck into some kind of consolidation. So you can see here, that was the optimal trade entry from this swing low. So we'll take off the fib so we can see it. This is the swing low, 1, 2, 3. That's the low point. That's the high point, 1, 2, 3. Once this third candle here was broken, you're just going to wait until it keeps going down to 62%, which is this dashed line. It hits it, you go long, and then you hold. That's what you would look to do. Now, you may have other parameters for your take profit. That's all up to you. I'm just telling you how I think it is more feasible and safer for you as a trader, because the more you try to greed over the pips, the odds are the market's just going to take it away from you. So let's look at another example. You can see that that first option that I was saying here is playing out. You don't get the entry, however, very unfortunate, but you can see there's a swing high here. We'll get rid of the New York session so we can see that better. There's a swing high right here. Price breaks it with speed with the fair value gap here. However, price doesn't come back down. Ultimately, price continues trending higher. So that's one way I would look for this setup. There are going to be days you miss it. It happens. Not every entry that you're going to get is going to get filled. It happens. The market will just keep running, and you may have gotten the direction right, but you just happen to not be a part of the move. And you have to live with that. A lot of people get upset and butthurt, and they try to chase price. Yes, there may be other techniques to get into the market after you miss this entry, but normally if your first initial entry is lost and you want to look for another setup to get in long again, you can see here as well. You have a swing high, 1, 2, 3. Price breaks it with speed, comes back into the fair value gap. There goes your entry right there. I would risk less up here because I would want this to be my original entry. The fact that I'm going in with a alternative entry, the risk that I'm going to get into this market with this entry is going to be less than what I want here. If price were to come back down into this, then I'll put on the full risk that I was looking for. Let's say it was 1%. But if I miss this, I'm going to go in with a 0.5% here. This was GU Thursday. We're below midnight opening price and we're below Sunday's opening price. This dotted line here. We can see that there is a swing high formation. 1, 2, 3. It is broken by a fair value gap here. So we'll zoom in so you guys can see that. That's a swing high, and this is the fair value gap. It's broken with speed. Price comes down, hits it, and then runs higher for a couple pips. If you were to get in at the top of the fair value gap as your entry, you can see that potentially you would have able to grab either anywhere from 10 to 20 pips on average here. So it's very small. It's not looking for 20 to 80 pips. You're looking for something very minimal, you know? And it doesn't take a lot to be successful in this business. All you need really is 10 pips every day. If you can make 10 pips out of 5 days out of the week, that's 50 pips grand total. I think you'll be a very successful trader and have a very successful trading career. So looking at another example for the entry techniques, Like I said, you can use an auto trade entry looking at the 62% retracement level from a lower time frame swing low to swing high. Not to mention, it all depends on what time frame you want to do it on. If you want to do it on the 5 minute, the 15 minute, the 3 minute, that's totally up to you, or even the 1 minute, that's all up to you. I'm just showing you some examples of ways you can get into the market to make a couple pips during London close. So you can see here, we're below SOP and MOP because MOP is all the way up here, and the daily range primarily is down. You can see we have a swing low right here and a swing high. You can anchor your fib on that. Wait for price to hit 62% retracement level. We'll zoom in and you can see it's here, 62%. It hits that and it runs higher. You also have another opportunity. You have a fair value gap here that breaks a swing high. So you have that swing high formation, 1, 2, 3. There's speed breaking that swing high here. Price runs up. You have a fair value gap here. You have another opportunity to go long inside here, and you can see ultimately price runs higher. So from this 62% retracement level, let's say hypothetically you caught it at that and you took it all the way to the highest point, you would have caught 35 pips theoretically. And if you got in at the top of this fair value gap, when price came down and hit the top of this green zone here, and bring it up here, you caught 20 pips. So you can see there are different ways to get in. I just find that those two methods are the most simplest entry techniques to get in and get out. This brings me to the end of the video. I hope this video was valuable to you as a trader. If you enjoy this video, then I think you'll like these two as well. Please subscribe, like, or comment for more high quality Forex videos. As always, safe trading, leave the indicators alone, and peace.